You don't want to have all your money into the stock market where it could drop in one day or 1 week. That's very attractive. Once you wire the money, you don't have to do any of the work. But what's different is you buy IBM stock, you can read the news, but you can't call the guy, the CEO, and ask him what's going on. Well, with these syndications, you actually have the ability to pick up the phone and call me and say, hey, what's going on? On a monthly basis, as a lead sponsor, I send out communication to all my limited partners saying, hey, here's what's happening at the property. Here's where we are compared to our pro forma. And here are the financial reports. You can review the income statement and the balance sheet yourself. With stocks, even if you have a great day, if your stock just went up 20%, what's the next thing you think? Should I sell?
Welcome to the Apartment Investing Journey, where we explore every facet of multifamily investing and development with top investors, brokers, and service providers who share their strategies, successes, and secrets to help you on your apartment investing journey.
Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. Today I'm joined by Darin Batchelder. Darin, welcome to the show, man.
Hey, David, appreciate you having me on. Excited to be here.
My pleasure. Thanks for taking the time. A little bit about Darin. He's been in the whole loan trading business for the past 16 years. He's responsible for trading in excess of $4 billion in loan sales. He's a business owner of TZK Capital since 2007. TZK Capital is focused on trading high credit quality performing real estate loan portfolios between banks to include residential, multifamily, and commercial real estate loans. And prior to forming TZK Capital, Darin was with ABN AMRO's Mortgage Capital Markets Group, was responsible for trading ABN AMRO's jumbo residential, CRA conforming residential, multifamily loans direct to other third-party banks. He, prior to that, worked with Computer Associates and eCredit.com in a sales capacity. He achieved CPA status with PriceWaterhouse and worked with PepsiCo's domestic and international audit divisions. And he achieved a B.S. in Accounting from the University of Rhode Island. So I didn't even dive into all the experience that you have on the limited partner side of some syndications and being key principal and some other stuff. So wealth of knowledge. I'm just grateful to have him and excited to dive into his story a little bit today. So thanks again for coming on.
Absolutely. Fantastic. Thanks for having me here.
So
that's a lot of years that you just quoted there.
Oh man, that experience is showing up. So I'm excited to sort of pick your brain and soak it all in. So
all right, let's go.
If you're all right with it, I'd like for you to just sort of back up and tell your story. Maybe give us the condensed version of your background and then how you are transitioning into the multifamily space.
Sure. So my background, based on all the different places I've worked and opportunities I've been on, has been kind of like a changing of the guard. I started out very conservative on the accounting side as a CPA, wanted to get more involved with actually bringing in business, so moved into the sales arena and software sales, and then wanted to up the game, so moved into institutional trading. And that's where the dollars got really large, trading portfolios between banks. And that process really formed the ability to develop strong, trusting relationships, because these banks, they're trusting you that what you're presenting is going to be, the loan quality is what you're presenting. And they have a lot on the line for themselves buying these large portfolios. So I wanted to take that experience and then move that into the real estate world. So I got involved about 2 years ago investing in multifamily. I joined a mentorship group here in the Dallas area, the Brad Sumrock multifamily group, and it's been fantastic. It's just been a group of people, of like-minded people that are willing to share and help the next guy. And so that's what I'm looking to do as well. I'm looking to help the guy that's trying to get their first deal. I'm looking to get my next deal. And I've got, so I'm trying to leverage with people that have 3, 4, 5, 10 deals. So it's a great network of people in the real estate world helping each other.
Well, I appreciate that background, and I'm interested in diving a little bit into just sort of your experience and what you've gravitated towards on the equity raising side of things. But I am curious about your experience in joining a mentorship program. A lot of our listeners are in that stage where they're just exploring getting into this space, and it can be daunting to the idea of getting into larger commercial multifamily deals. some may be looking at some of these mentorship programs that are out there. What has been your experience with mentorship program in general, and what was the value that you saw?
So for me, I saw a ton of value. I joined in December of 2017, and prior to that, I didn't own any real estate other than my personal residence. Maybe a month or two prior, I bought a new construction duplex. That was kind of got me in the game, but I didn't own any large multifamily. And so within a year's time of joining the group, I was able to go from not knowing how to purchase a large multifamily property to actually getting in contract, raising the money. We raised like $2.5 million. And then closing on a 76-unit property within a year. So the value of being part of the group was, with my background, I've been trading loan portfolios for a long time. I knew the multifamily space, so it wasn't really a learning the asset class perspective, but I still didn't know how to buy a community. I didn't know who the right partners were. So being part of the group introduced me to attorneys, introduced me to inspectors. I'm not an engineer, so I was fearful that on my first transaction, I'm going to buy a property that's going to have all kinds of physical characteristics that I don't see, and I get into a problem asset. Well, when you're part of a group, people tend to give referrals, and those vendors have a lot of skin in the game, because if they do a poor job on one transaction, that syndicator is going to go tell the other people in the group, and then they may lose a lot of business. They're not just losing one transaction, they may lose a lot. So in addition to that, it provides, and this is huge, I really can't limit this, is it provides credibility with the broker community. So in the Dallas market, which is the market I'm in, there's probably 6, 7, 8 different broker groups that control 80% of the market. So if you call up a broker and you say, hey, I'm interested in this 100-unit community, and they ask you, what do you own? And you say, I own a house or I own a duplex, they're immediately going to think this guy can't close. This guy is going to be a waste of my time. But when I say that I'm part of the Broad Sum Rock group, most of the brokers change their mindset and they say, well, okay, you may be junior, this may be your first deal, but I've closed like 10 deals with people within the group, and you always partner with experienced people to get the deal done. So the value is really adding credibility, surrounding yourself with like-minded people, and then building a team of experienced partners.
Yeah, I can see that for sure. And I think that is a path that a lot of people should really consider, is going down the mentorship path.
Through my Instagram, I have a lot of people contact me, and there's a number of younger people that are trying to get their first deal that contact me. And, I always present back that it depends on how much capital you have. Some of these mentorship programs are not cheap to join. It's kind of a pay-to-play atmosphere. If you have the funds to join and you're fully committed, it's not like you join and you're definitely going to get a deal. That's sure. The other thing is there's certain people that join and they don't put the work in, they're not going to get the deal. But if you don't have the capital, I advise these younger guys, don't put all your capital into a mentorship group and then you can't do anything. You know? For the younger guys, I would recommend they go to, the free meetup groups in their city. And it's going to be harder for them and it's going to take them longer, but go to the meetup groups, meet as many syndicators as you can, and try to build rapport with one or two of them and them to take you under their wing, add value to them.
Yeah, that's great advice. Depending upon you're right. They can be expensive and you don't want to throw all of your available capital into a mentorship program and then be limited on what you can actually perform on. So
right, exactly.
So I appreciate you walking us through that. Let's talk a little bit about the challenges that you faced in this transition. You mentioned a couple of them, but what were some of the biggest challenges that you faced in going from being on the debt side of things to actually acquisitions?
I would say almost every step of the process. It's each step of the process is a leap of faith, and you have to be the type of person that can take that leap of faith. You will not know everything when you're taking a step forward. I guess for me, I was able to do it because I've already had multiple transitions in my career. So, I went from being a CPA to, hey, I don't want to be a CPA anymore. I want to go into sales. Well, I didn't know sales. I just had to jump in and figure it out. And then, leaving there and then going into institutional trading. That was completely new as well. So those experience, and then started my own business. Starting my own business is funny because people would ask me, what was the toughest part about starting your business? And I said, signing the lease to my office space. And people get confused and they're like, why? Was it, a multi-year contract? Was it, big financial commitment? I'm like, no, once I signed the lease to my office space, I was committing to get into business. I had to tell my friends, my family, my prior colleagues that I just opened up a door. And now I'm at risk of failure, right?
Yeah.
So that fear of failure can stop people from actually taking that step. Now, once I was in the office and I'm making cold calls, I'm like, this is the same thing I was doing for the other guys, but instead of getting 20 or 25% commission, it's all coming into the company.
Yeah.
So you have to take that leap of faith. So moving into on the real estate side, there were a number of different pieces. One was just becoming a passive. I remember the first time I invested in somebody else's deal, I read every page of the LLC agreement, the subscription agreement, the PPM, every word of it. And then when it came time to wire the money, I wired the money and I send an email. First I call and I confirm the instructions and whatnot. I send the email saying, hey, I just wired the money. I'm expecting an email back saying, we've got it, nothing. Radio silence. So now I'm like, I wait an hour. I don't hear
a little bit of panic setting in.
Yes, exactly. I'm like, and this is somebody that was within the group that other people had given me high accolades about. And I shouldn't have been worried, but it was my first time wiring 50 grand to somebody that I didn't know all that well. So I text, no answer. I wait another hour. I call, and then finally I get a response saying, hey, Darin, I just want to let you know our bank, I can see that the transactions come in, but I can't see the detail on who it's from until the next morning. So tomorrow morning, I'll let you know that, get confirmation. I was still sweating it up a little bit that night. And then next morning I got the email. And then I invested in 6 other passive deals and I didn't have any worry about it because I had gone through the transaction once, but that first time I was nervous. So another time of nervousness was, so I start looking for my own deals. And one day I come home and I tell my wife, I said, I just put my first offer in. And she's like, you excited? And I said, I'm scared shitless.
Yeah.
She's like, what do you mean? You've been working so hard for this, right? And I'm like, what if they accept it? I don't know if I'm ready. And so there were 2 offers that were a couple $100,000 higher than me. And so I lost the deal. And there was a little bit of relief that I lost the deal. I wanted it, but it also showed me, okay, hey, you're underwriting, you're not way overpaying. What you're doing is correct. And, look, when you see things trade away from you, it gives you a feeling for where the true market is. The next time I went and looked at a deal, I had underwritten so many deals that didn't work that it was probably a month later and all of a sudden I found one and it was double the price. It was a larger property as the first one I bid on. And I bid full price right away and was trying to get the deal and going aggressive. I ended up being runner up, but the fear factor, you got over the hump. Each time. Yeah, each time. So then when I finally get a deal under contract, well, now I have to raise money, right?
It's another hurdle that you haven't experienced yet.
So everybody had told me, hey, Darin, the hard part is finding the deal. The money just comes. And I don't know if I would say that it worked out just that way. So when we started the capital raise, in the first week, we got like 65% of the money like that. I was like, oh, this is working pretty good.
Going smooth.
Yeah. But then it really slowed down to a crawl. What's happened in our group is our group has gotten so big that there's always 4 or 5 deals now going on at the same time. So you're talking to an investor and they're like, hey, Darin, I like your deal, but I've got these 5 deals in my inbox. I can only invest in one. So why your deal over the other ones? So I had kind of 2 different investor bases. I had the investor base within the group that has that kind of mentality. You don't really have to sell them on why multifamily is a good asset class or how it works or the returns. But then my personal network was different. My personal network was like, hey, Darin, I trust you. I know you've been successful and everything you've been working on. but I don't really understand it. Can you spend some time with me to educate me? And then at the end of it, they're like, thank you for this opportunity. And I didn't know I could invest in deals like this. And that piece with my private network, my personal network, is the part that after I closed the deal in December that has really charged me up, because I was in the same boat. Nobody had ever presented me with an opportunity to invest in a private placement in 47 years. And I belonged to some nice golf clubs, was around some wealthy people, and still nobody approached me with that type of opportunity. So I really want to give back and reach a lot more people and let people know that they have an alternative to invest in these types of deals other than just putting all their money in the stock market.
Well, maybe that's a direction that we can take this conversation, and walk us through what, generally speaking, the conversation is like with your personal network, not someone that's already educated on multifamily, not someone that's already chosen multifamily as an asset class that they want to be in, and they're familiar with passive investing. Let's talk about what that conversation is like, maybe from how you approach people from the very start, and give us an overview of what the conversation looks like, how long it takes. Is it multiple conversations and educating? And just walk us through that.
Sure. It's not the same for every individual. Each person has a different background and a different risk profile and that sort of thing. But with the personal network, depends on where you know them from. People that I know well that are on my cell phone, I would just text them a short little text. Any interest in a multifamily deal? A lot of them, they get that. Text messages are difficult to ignore. You send somebody an email, and people ignore emails all day long. But for some reason, you get that beep on your phone and you just feel compelled to answer it. So most people that I would text would respond one way or the other. So it may be not interested, or it may be, a lot of times it was, what's that?
What do you mean? Yeah.
What do you mean? I don't understand.
Right.
And then the next thing, I would just give them a little blurb saying, hey, I bought this, me and my partner bought this 76 unit community. We're raising capital from limited partners, and the return profile looks like this: an average cash on cash return of 8% and a total return of around 80% plus is what we forecast. If that's of interest, let's get on the phone together. That's kind of how we would start it. And, sometimes they say, all right, let's get on a call, and we'd talk for a half hour, an hour, and they would just have a lot of questions, and I just answer all their questions. Or sometimes if they're local, we'd get together at Starbucks, or if they come to my house, I go to their house.
What are some of the common questions that you're fielding and having to answer as it relates to people you're talking about or introducing to passive investing in multifamily?
So one is the returns. What can I expect for returns? When do I get paid? Is it guaranteed, or is it forecasted? So our deal is first distribution wasn't for 6 months and then paid out quarterly thereafter. So returns is one. Secondly is, and this is a very important one for a lot of people, is, Darin, I don't understand this asset class. I've never done this before. What's the biggest risk in doing a deal like this? For me, the way I explained it to my investors was, look, I haven't done it before, and so I can't speak to going through multiple downturns and exactly what's happened during those downturns. But what I can tell you is I've seen it from the loan trading space. So many years on the loan trading space, and where I saw people get in trouble with these multifamily or commercial real estate deals is when the loan comes to the reset and you're in a really funky economy. That's the biggest risk that I see in these deals, is that multifamily deals don't have 30-year fixed rate mortgages like single family. So there's a balloon feature to it, and not everybody understands that. So explaining that, okay, most banks want to have all their loan paid back in 5 years. Fannie and Freddie will do 10-year and 12-year fixed rate loans. Well, if you have a 3 to 5 year business plan and you get a 10-year loan, well, you've got some running room so that if there is a dip in the economy, you can ride that out. Because the biggest risk from my standpoint is you just don't want to lose the asset. as long as you can keep paying the mortgage, and even if cash flow goes down, and look, I'm an investor in 7 other passive deals. And from my perspective, if the economy tanks, right, and the stock market drops by 40%, and my syndicators who are managing my other multifamily deals say to me, hey, Darin, we're going to have to cut your distribution or potentially even pause your distribution for a time period because the economy is so bad, I'm okay with that. Just don't lose the asset, because if you lose the asset, we lose all of our capital.
That's a good perspective. I like that. And I like the way that you explain that. So this 76 unit, I want to dive in, if we have time, dive into the 76 unit, your first acquisition on the principal side of things. So I assume that you had invested as a limited partner before that deal. Is that correct?
That's correct. In 7 different deals prior to that.
Great. Is there anything else that you would like to talk about as it relates to any information you can share for those that are listening that are interested in this idea of passive investing before we dive into your 76 unit deal in Texas?
I think it's an amazing opportunity to be able to invest passively. So there's a lot of people in this country that high paying jobs, they make a lot of money, and we've all been, I guess, brainwashed may not be the right word, but we've been taught from such a young age that at your company, divert a certain percentage of your money to go into the stock market, into your 401k, into your IRA, and even into, after-tax investments, but traditionally with brokerage account, buying stocks, ETFs, mutual funds, and alternative investments. Just the regular normal people in day-to-day life that have corporate jobs are just not educated on how to do that. So when you find out that you have the ability to invest in another asset class, you don't want to have all your money into the stock market where it could drop in one day or 1 week. That's very attractive. Mm-hmm. And once you wire the money, you don't have to do any of the work. But what's different is you buy IBM stock, right? You can read the news, but you can't call the guy and ask him what's going on. The CEO. You own 100 shares or 1,000 shares. Well, with these syndications, you actually have the ability to pick up the phone and call me and say, hey, what's going on? On a monthly basis, as a lead sponsor, I send out communication to all my limited partners saying, hey, here's what's happening at the property. Here's where we are compared to our pro forma budget. And here are the financial reports. You can review the income statement and the balance sheet yourself. That doesn't happen when you buy a stock. You can look at the quarterly reports, but most people don't, and most people wouldn't even know how to really analyze them. So it's much more personal. The thing that's nice about these deals too is that the operator has the ability to actually change the valuation of the property by the performance, by increasing rents and decreasing expenses. And again, a lot of people in my personal network didn't understand that because, if you buy a duplex, the valuation of that duplex only goes up compared to the other duplexes around it. But you buy a 76 unit property, it could be sitting right next to another 76 unit property that is managed poorly. And then you take this one and you put it in good rehab dollars and you increase rents, you manage expenses well, the net operating income goes up. The valuation of this property will go up based on the actual cash flow. Yeah. So that's very attractive.
Yeah, that component of forced appreciation is very unique to the multifamily space and a couple other asset types, but you definitely don't have that option with IBM stock.
No. You sit and wait and hope. And you also always have with stocks, even if you have a great day, right? Like your stock just went up 20%. What's the next thing you think? Should I sell? You're always looking at your stock portfolio and thinking about the timing of when you should get in and out. With these multifamily deals, you wire the money, it's a 3 to 5 year business plan, and then your money, it's illiquid. You're not going to get that money out until there's an exit, and the exit could be a refinance. It could be a sale at the back end. So,
well, great. I appreciate you, explaining that to us, giving us some insight into the passive investor side of things and how you explain a little bit of the passive investing to, your network. In the time that we have left, we've only got a few more minutes here, but I want to dive into your 76 unit deal in Crowley, Texas. Let's start from the beginning. And how did you source the deal? And walk us through the acquisition process.
Okay, so got the deal it was a marketed deal from Marcus Millichap. The broker was Trey Caldwell in the Dallas market. And here's another piece of advice I'd give your people out there is that I would try to develop relationships as quickly as possible with the broker community and go out on a lot of property tours in the beginning. So this is a learning thing for me. I was a little reluctant to go out on property tours unless I had underwritten the deal and the deal looked like it was I was going to be able to put in an offer. Well, what that prevented me from happening though was getting out and meeting these people. So with Trey, I actually went out and met with him on another deal that I was bidding on, and we developed a relationship. It was a deal in South Dallas. I didn't end up winning that deal, but we developed a relationship, and he told me, hey, I got this other deal in Crowley, go take a look at it. And so at first I went and looked at it, and I told him I was going to pass. I didn't really know that submarket. He called me back and said, hey, Darin, you have to meet me at the property. He was a good salesperson and convinced me. I said, why? He gave me a couple of reasons why. I said, okay, I'll meet you out there. And I did. And what he told me was true. I got there and I was like, I see what you mean. And I have to spend more time on this thing. And if he didn't call me, I was already going to pass on the deal. If he didn't call me and convince me to go out there, I never would have gotten that deal. I may still be looking for my first deal. So building those relationships is critical.
Interesting. And this is unique in that it's a townhome community. Is that correct?
That's correct.
Tell me a little bit about it.
So it's early 1980s construction, 1983, individual ACs, individual hot water heaters, pitched roofs. And that was one of the things that he taught to me about was because I was bidding on a lot of stuff, 1960s, 1970s that had boilers and chillers and just, a lot more maintenance related to them. So, the difference between apartments and townhomes is townhomes, you don't have anybody living above you. Okay. So it's a 2-story. So if you're upstairs or if you're downstairs, you don't have, a person that you don't know that's walking up and making noise above you. So that's a big advantage to a lot of people. A lot of people like not having somebody living above them that they don't know. Also, the ceilings were much higher than a traditional apartment. So those were a couple of the features that really drew my attention. So when I went inside the units, they were very dated. I don't think they had been rehabbed since they were original early 1980s. So they were old inside, but I loved that they had higher ceilings, and I saw the potential if we came in there and rehabbed the unit with some modern finishes that it would look much nicer, and it's panned out that way.
Aside from the aesthetics and the physical aspects of it, what was it about this deal that interests you, and why did you end up moving forward on it?
So that broker meeting got me to the point where I'm like, this property potentially has some legs. But then the next step in the process is, okay, what are the comps? What are the properties that are around here? And where do I think I can bring rents if I put money into the property? This property was a little unique in the sense that in Crowley, this was like the largest property, BC property in this town. Some areas, it's like apartment row where there's just one community after the other. Here, there wasn't that. So South Crowley is really on the border of 2 counties. So it's in South Tarrant County. So the comps from the broker were both to some apartment complexes in South Fort Worth, but they were like 5 miles away. Okay. And then some communities that were in the town south of Crowley, which is Burleson, but Burleson is not in Tarrant County. It's in a different county. And those properties were like 3 miles away. So I went and looked at both segments of properties and looked at the demographic profile of the Crowley property. And I thought that the comps in Burleson were better comps than the Fort Worth. And so when I used those comps, I was like, I can raise my rents by like 15, 17% from their effective rent and still be under where the Burleson properties are renting now. So that was basically the business plan. So when I went and met with those, I learned so much when I go in to do these comp reviews. So, some people in the audience may never have done it, And that's another intimidating factor. What do I say when I'm walking into another apartment community? Some people pretend that they're a renter. I don't do that. I just walk in and say, hey, I'm part of an investor group that we're looking at properties in the area. And, would you mind sharing what you guys are renting units for? Well, the first property I went into, she was like, which property are you looking at? You're looking at the one in Crowley, aren't you?
Oh, really?
Yeah. It was a small little area. She had been at this property for a long time. She knew her stuff. And so she said, hey, I was trying to get my owner to look at that property. And I didn't even have to ask a lot of questions. She just started to share. Hey, I've lived in Crowley for 10 years. It's in a really good area. I would let my daughter live there. All these things that, well, now all of a sudden I'm starting to get warm and fuzzies, right? This deal is getting better. And again, if the broker never called me, I never would have had this conversation. Then I went to the next comp, and it wasn't as warm and fuzzy feeling, but they were like, look, we're raising rents like every 3 months here. Like people just keep moving into town, incomes keep going up. So between those two comps, I got really comfortable that I was going to, if I improved the product, that we would be able to raise rents, and we've been able to do that.
So where's that project at today? What's the current status?
So we closed December 2018. So we're nine months in it. We've improved the net operating income by over 20% already. And primarily we started out with doing all interior rehab, and we didn't touch the exterior yet. Actually, last Monday, so we're about a week and a half into our exterior rehab right now. We're painting the entire exterior of the property. The entire perimeter fencing was like falling down. We're replacing all that fencing, and we're going to replace signage and all that. So that process is happening right now. I actually did it a little backwards. So if you talk to most syndicators, and I agree with their approach, is the first thing you want to do is the exterior, because it attracts a better tenant profile. Like they drive by, they see how the owner's putting money into the property. It looks nice. So
do you feel like that was a mistake on your first one, or was there a reason for it?
There was a reason for it. And the reason for it was, look, I'm getting into this for the long game. So I want to learn. And I didn't come from the residential fix and flip space. I didn't have relationships with general contractors. So although our group, has a handful of contractors that they work with, I said to myself, well, I'm going to interview these contractors. I'm going to have each of them come out to the property, walk the property with me, and I'm going to pick a contractor that I'm comfortable with, that, I want to build a relationship with. So that it probably took me a couple months to do those interviews. And then once I selected the contractor, the hardest part then was actually picking the paint colors. I'm not a
interior design guy.
No. And so what they would do is I contracted for them to give me some ideas. They would take pictures of the property. They'd send it off to the paint company. They would put the paint color on it and then send it back. But that process of taking our pictures and putting the paint colors on would take 3 to 4 weeks.
Oh, wow. Goodness gracious.
Which was terrible, right? So then I would get it back and I'd say, I don't like it. Let's try something different. Well, now it's another 3 or 4 weeks.
Wow.
That happened 2 or 3 iterations. And then I said, forget it. We can't do that anymore. So let's just go down and put some paint on the side of the wall. And that's what we did. And we figured it out. So again, like all these little steps, like I don't know what I'm doing. I have to learn, you just have to take a leap of faith and then rely on experts, so for the paint, I relied on, the GC. I also hired a interior designer that helped me reconfigure our leasing space. So I had her counsel me on paint color. And then my business partner that I brought in the deal, we haven't talked about that very much at all. But my business partner I met through the group. His name's Raj Gupta. He's out of Chicago, and he's a very experienced guy. He's been in the real estate business for a long, long time, has purchased, rehab, sold 100+ unit properties. And that's who I wanted on my team. So I had the designer people, and then I had my partner to bounce ideas off of. And between all of us collectively, we were able to come together.
That's awesome. And what's the game plan moving forward?
Continue to just execute on the business plan. So we've probably renovated a third of the units so far. And so we'll just continue to
keep turning the units.
And then it's a 3 to 5 year business plan. What's interesting is last fall when we purchased the asset, interest rates were going up, right? It looked like that was the trajectory. And now all of a sudden it's been an about face. So I think when we actually locked in our loan, we locked in at like a 491 10-year fixed rate loan. I could probably get that same product today for 50, 60 basis points less today because rates have come down. So when we built the business plan, we built that rates were going to go up and that cap rates were most likely going to go up. So if the opposite happens and interest rates go down and cap rates go down, I don't know if that's going to happen, but if that happens over the next year, year and a half, then it may cause us to look at potentially exiting early because the environment might be a better sale opportunity. That's a good problem to be in.
Yeah, you'd take that, right?
Right, exactly.
Well, Darin, I appreciate you walking us through that. That 76 unit first deal sounds exciting. You've learned a lot on it.
Absolutely.
I want to be respectful of your time. We got to wind down here. And as we sort of wind down, I've got 3 final questions I want to ask you. Just get your knee-jerk gut reaction to. You ready?
All right, let's go.
All right. What's the biggest mistake you've made on your apartment investing journey so far?
I think it probably would be the speed in terms of developing relationships with brokers. If I had done it over again, and any advice I give a new guy is, I would map out like the next 2 months, go out on one property tour the first week with this company, another one with another company the second week, just get your name out there as quick as possible.
That's awesome. What's the biggest win you've had on your apartment investing journey so far?
So I've owned my own business now since 2007, and I think the man upstairs have been very fortunate and blessed. But in the last few years, I don't know, got a little bored with it. So I'm extremely thankful that I have a new business opportunity that I'm excited about. And one of the things that I'm excited about is that it's not just about me. It's these deals help so many people. So bringing in the rehab money helps the community. All the tenants get to benefit by having a much nicer community. And then it's not just me making money off the investment. I'm bringing in limited partners and also other general partners into the deal where we all make money together. And that to me is a fantastic thing because I love the relationship part of the business. So I guess the new passion and energy related to this business is great.
That's great. And then the last question, you might have already answered this one. Maybe you can give us another one, is
Sure.
What's the best advice you have for someone who's just starting their apartment investing journey?
Yeah, that one I would probably point to what we talked about earlier, mentorship or not. So if you can afford to get involved in a mentorship group, highly recommend it because, I talk to a lot of people through this Instagram that want to get into it and they're just surrounded by friends and family that are not in the business. And it's very difficult when you have all that negativity surrounding you that, hey, you don't have the experience. It's pie in the sky dreams. You can't do it. You need to surround yourself with people that are going to tell you that you can do it. If you have the determination, you can make it happen. So being a part of a group is going to give that to you. If you don't have the capital for that, then work hard to go to a lot of meetup groups and develop relationships.
Great. Well, Darin, thank you for your time, taking it out of your day to share with us your story and your experience in transitioning from previous business into the multifamily space, your experience in investing in, as a limited partner in multiple deals, and then finally getting your first deal under your belt, the 76 unit in Crowley, Texas. Thanks for sharing all that. What's the best way for people to get in touch with you if they want to learn more about what you have going on and also potentially invest in any other deals you have going on?
Yeah, that'd be great. So I'm on Instagram at Batchelder Darin, BATCHELDERDARIN. So you could private message me on Instagram. My email address is dbatchelder@tzkproperties.com. So you can email me there. Those are probably the 2 best ways to reach out.
Awesome. And we'll make sure that those are in the show notes there as well. So again, thanks, Darin, for coming on. I appreciate it and hope to connect with you again soon.
Thanks for having me on.
Hey guys, thanks for listening in today. Hope you enjoyed the episode.
please hit that subscribe button or leave us a quick review. Also, don't hesitate to reach out to us on Instagram, Facebook, or at apartmentinvestingjourney.com. See you next week.